Good afternoon, everyone. You have me again for a half an hour. This is more a question and answer, and I'm dual broadcasting with the YouTube Live. So let me know if you have any questions for me. Just to let you know what I'm watching in the market. If you want to know the correlations I use, let me know because a lot of people ask, like, what is your favorite correlation over 42 years? And it always changes, but a lot of what I do is extremes. So just let me know what you'd like me to talk about because it's ask me anything in here and I'm happy to help. So just let me know. My first thing, though, if you want to know what I do every morning, is basically looking at correlations. So, and like I said, correlations can change all the time, and it really comes down to extremes. So, I really think extremes are a big deal in here. And what I mean by that is this, and I'll show you. You're going to hear the mic bang, not because I'm mad or anything, just to let you know. There you go. All right. So, this is what I'm looking at. When I go into the morning, and I'm a little pissed off, by the way, about this. They took off a post I had about China, but I'm looking at a number of things. One of them is world markets. So I pay for TradingView to get the world markets in here. So that's number one. So I'm always looking at the world market. So many have wanted to buy the China market. And I actually did a post last night of that I was warming up to the China market because of that triangle, but they didn't think I was specific enough. But if you're a futures trader, you might say, well, why don't I just buy China down here right now and just stop myself? Because it has a lot of gap risk and news risk and all that. But I'll show you on how I look at that. And then I look at FinViz and I'll look at some Chinese stocks. But let me know if that's what you want to see. That's that kind of thing. So I'll look at world markets, no doubt about it. The other thing, though, is I definitely look at the bond market versus the stock market, but not every single tick. So that's a big problem a lot of people have is they think just because if the bond's down, tick stock markets have to go down, which isn't true at all. This is another one that, and let me go and put my normal grid up here. This is another one that drives me up the wall. And it's that if the dollar is going down, then the stock market has to go up and vice versa. So there's your dollar on an hourly. And really, I mean, on Friday, the ES went straight up. So a lot of that earnings related. So I don't use that literally. I'll use the bond market, but I'll use it like this. So, and like I said, let me know if this is something you want to see. But this is what I'm doing in the background, what I'm doing at night and in the morning. So I'm watching the bond market go down like this. Go down, 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 down. Now, this is something else I mentioned. Historically, markets go up the end of the year, not right at Christmas. They usually go up to about December. What were we talking about? December 28th. And they sell off a tremendous amount. I actually did a post on that. So, in fact, let me see if I have that post. I like when I can do that. So, let's see. No, I won't be able to find it that fast. Let's see. No, I won't be able to find it. But the whole point is December 28th, a lot of times the markets go down. But that wasn't the point. The point was the bond market was going down, but the stock market had started to sort of just form that. Stop going down, basically. So the correlation had started to break down. A lot of that led by all the ones you know and love, like the NVIDIAs. So the point was if the bond market stopped going down, then this was more likely to explode, which is exactly what happened. So now, though, fast forward, and I call this concurrent mode. What I mean by concurrent mode is when the bond market got over this and the stock market was over that, they just sort of went hand in hand. So they went hand in hand. So you see right here that now the bond market's under here. So that's a 20 moving average. I use all kinds of moving averages, but that's one of them. So that's just one of them I use. And I'll use a 50, but I'm using it in relation to other things. But before you say, well, it doesn't seem to be working, I'm not just going on the bond market versus this. I'm also going that the Dow is down like 200. You have the Russell is way under it. The Russell is very interest rate sensitive and it has a lot of regional banks. So that's under it. The Dow isn't under it anymore. The transports are right at it, and the bonds are way under it. So you have a number of divergences. So the first logical thing is you'd think, well, if the bond market rallies, will the Russell rally with it? The other thing is the KRE, the regional bank index, is way under it. Just keep in mind when the regional bank index had gotten destroyed right here, believe it or not, when it stabilized the stock market, the ESs went up. So not the Russell, but the ESs. So I'm not using that other than it is a warning sign. These are all warning signs. Now, I know this sounds corny. That doesn't mean markets go down. It's just to show you warning signs. So just to let you know that. Now, that's one thing about that. The other is to be creative when it comes to correlations. So if the bond market is going down, but you got the Nvidia going straight up, or you got the Broadcom going straight up, then it's not going to correlate that day. You could do something as a hedge. I did a hedge and I lost money in QQQ, but we made an XBI. Now, why did we make an XBI? It's because a lot of XBI stocks are going nuts on takeover rumors. And I'll show you what we're talking about. I just went to healthcare. You can go. There are a lot of different ways to do it, but boy, these are some big moves on some SRPT. Looks like it's breaking up. MOR, we actually posted that last week with unusual option activity. But if you see these, the Lilly, the NVLO, APLS, that was another one that was on our unusual option activity. If you see all these going up, then it's more likely that if this market stabilizes, the XBI is going to go up, not down. So that's what we're watching. So if these are going up, it's more likely that other bullish patterns are going to go up. Now, I'm not saying the XBI is really bullish whatsoever, but it's more likely to go up if the whole market, if the other biotechs are going up, the ones especially with good charts. Now, APLS, yeah, that looked like dirt on Friday, but now it's retained its bullish structure. And I'll tell you right now, it's extremely hard to buy it now when Friday it was 5 points lower. Yeah, that's a really good trend line. That looks like I had martinis for lunch or something, but I didn't even have water. There. I'm just telling you that just because something goes down doesn't mean it's not still in a bull market. The deal is you want it to retain its bullish structure, which, as you see, it sort of has. There's another one, SLNO. That was actually on our charts. So the whole idea is if these start going up, then the ones with bullish patterns are more likely to go up. There's another one, rhythm, that are more likely to go up. So if those all have that type of pattern, then the least risky way is to buy XBI, which we came in long and bought more. Yeah, there you go. So far, so good in there. So maybe you have a hedge that you're losing in, but on the other hand, you have other things that are acting great for you. And like I said, if you see this many up when the Russell's down 23, that's then I'm going for either the XBI or some of these that still have bullish patterns. It's really hard, don't get me wrong, really hard to buy something that's already up 2 points. But I'm looking at stocks like this to buy dips. Now, I'm having the hardest time with this because the order entry keeps coming up. So I don't know why. I never had that problem before. So that's what I'm doing. So when I'm watching this correlation, these stocks refusing to go lower, the Caterpillar had earnings and just stayed up, then I'm staying in XBI and I'm staying in this. So now let me just tell you, when I saw the market plummeting, I'm like, I don't have a chance in here. I give up. But I didn't get out. I didn't get out because so many biotechs look good. So I'm still in this. So basically, we have on this. We're long those. See that $1.25? I came real close to selling that at $1.25 until I saw the whole market go up. When I saw a lot of other biotechs go up. So I'm, believe it or not, still in that. So that's what I'm doing. I'm trying to use correlations. All the time I'm trying to use correlations. And right now, when I see a lot of unusual call activity in the MORs of the world, then I'm more likely to buy stocks that look like that. It's really hard to buy that when it was just 8. But look at all those bull flags on the way up. So I'm definitely looking at something like that. It's a little hard when it's already had a heck of a move. There's another one we looked at, ANIP. Now, why wouldn't I buy this? I want ones that trade some options. This is a shutout. Look at that. No options. Look at that bid and ask. That's brutal. So I'm not messing with that. So just let you know there's a time and a place to mess with those. And that doesn't seem like it to me. And also another thing, as opposed to when I was trading on the floor, there's a lot of pattern recognition. And what I mean by that is if a stock is acting like garbage right now, but still has a bull flag, pattern recognition programs can take it up later. So just because it looks bad right now doesn't mean you can't try to establish some kind of call debit spread. So just keep that in mind. And on these, I haven't found a lot I want to buy, let's say overnight. So I've just stayed in XBI. That just seems like a good way to play it. So as you see, if you go and put this on an hourly, hourly is no bargain. You need to see this. Let me take off the drawing set. There. Bulls will get more confident if it gets over this. makes like a new 15-minute high. So that's what I wanted to show you. So are there any questions for me on how I'm setting these things up? Or I'll just go through scans and show you certain scans I do. All right, well, I'll show you a scan. So here's China. Like I told you, China trying to turn the corner. Trying. It's tried before. So we're going to go and take China in here. I want to show you on how I'm going to try to find some stocks within the Chinese market to buy. I'm not saying I'm buying them now, but I want to show you. So you see China's, for once, trying to form something. Trying to form something. So the next thing I do is I go to a free site, FinViz. And by the way, the other thing, I'm constantly scanning. I just can't stress that enough. But so I just showed you the China market. Now, so many people have wanted to buy it all the way down, all the way down. But within this, now, is there a way to find some China stocks that are starting to turn the corner, that already are turning? So I go to FinViz. I haven't even signed in. Sure, they're thrilled about that. So let's go put that in there. There's FinViz. I use FinViz all the time for scanning. So thanks for saying that, ET1. So that's really nice of you. So all I'm doing in here is going to FinViz. And I'm going to screener. Now, this isn't perfect. Any screener you do, you still got to look at the individual stock. And when I mean the individual stock, I mean if you see a stock going straight down. So here's China. It's 228 stocks. All I did was say country China. That's it. Country China. I want them optionable and shortable. Usually those are more reputable companies. Then I want the price over, let's say, 10. You don't have to have that. You can have over 5. It's all of 38 stocks. And the current volume, let's say over 100,000. 32 stocks. So let's just take them. So I'm going to take this and share this with you too. This is just a readily available scan. There. And all I'm doing now is I'm sorting them by price. Now you can highlight them and it'll show the chart too. Like that. You don't want to buy something that looks like that because you don't know when it's going to turn. What I mean by turning, you'd like to see some kind of green candle down there. So let's just take them all. It's all at 32. I think we can do that. So you see what happens if you try to buy on the way down. You need to find when it starts turning. What's turning mean? Like that. Where it has some kind of rectangle and you buy in the rectangle. Now, let me just tell you, one of our most successful strategies is not to buy in the break of the rectangle. It's to buy when it tests it. And then it has a reversal candle. Now, I'm not saying buy Neo. I'm just mentioning that. But you'll look on here. You know that China has been getting destroyed. Do any of these have an uptrend? Well, there's one. 10 cent. No relation to 50 cent. This, when it has a gap up, it got taken over. Yeah, guess what group? My favorite group, the biotechs. And the only reason I like biotechs is because they have underperformed so much. And the only way for them to outperform is if you start getting a lot of takeovers. So when you look at all these, do any of these have halfway decent charts? I have a tough time with these Chinese education stocks just because there's regulatory stuff. So how about this? Does anything look halfway decent? You don't want something at a new low. You want that if China went to a new low, what stocks didn't go to a new low? Oh, there's one right there. V Shop, Dairy Queen, new low. ZTO, and here you go. Somebody might say, well, there's a green candle. Well, you better put it on a shorter time frame. And if you do, yeah, maybe you'll see something bullish. Let's look. So we're going to take little ZTO. And you see the candle. The problem is that that's one day. It's had a lot of up days. You want to see how it works off any kind of overbought. This is not bad if it consolidates. And there's that rectangle we talked about. So, and that's a 1 hour. But that's all I'm doing. I'm going through these. I don't want the ones that look like Jinko Solar. Don't want that. Maybe Yum China. You see this. I hope you see this on how it stopped plummeting. You see Trip.com. That's actually, look at Alibaba. The problem with Alibaba, it has earnings coming out. But yeah, this is exactly what you're looking for. You're looking for stocks that refuse to go lower when the Chinese market tested its lows. There. So there's your China market. We can even put it on a weekly. It's ugly. A monthly is ugly, but it is at monthly support. So what you're looking for is definitely something like that. So the whole theory is if the China market really turns around, you want the stocks that are already acting well. So that is. Now, I know nothing about Trip.com other than you got to be sure it doesn't have earnings coming out. So that's the way I look at it. Got to be sure it doesn't have earnings coming out. So let's just go to it. Let's look at the Trip. So there's Trip.com, obviously in a bull market. I mean, I don't want to say obviously because nothing to me is obvious in the stock market. I respect every tick of the market, but it is acting better. The problem is it has earnings on the 5th, right here on the 15th, but it definitely is acting better. So let's just look at options. I don't know about that. The problem with these is they have gap risk. So if China opens down, yeah, they could open down. But there's certain ones that are definitely trying to turn the corner. And turn the corner to me. Oh, I knew that was the wrong stock. There. That's Trip.com. That's a lot better chart. Look at that sucker. Yeah, I'm glad I showed Trip. I was seeing if anybody was listening. But no, all kidding aside. So in here, and like I said, I hardly ever buy calls on the way down. I'll buy them on the way up, especially with calls because you got to have the direction and the timing correct. But something like that at least has a bullish pattern in a bad world market. So I know nothing about Trip.com. All I know is that if I was going to buy this, I would probably go out to March and do some kind of vertical call debit spread. But you're not, let's see when earnings are. Earnings are going to be March 6th. That includes earnings. So just to let you know, when I buy options, if I ever buy premium, which is incredibly rare, it's either in a rumored takeover candidate or it's something that includes earnings. That way it won't lose a lot of time premium. And I look at it this way. If I buy the 38s and I'm wrong on $1, I'll lose probably 40 cents. If I buy these 38s, well, let's say 37s, you're losing 50% because you have to have time and direction correct. Now, you might say, well, it looks good. Why not buy these and sell these like a calendar? Like buy the 38s and sell the 38s. Well, that's a little rough if it gaps up on you. You'd hate to lose money being right. But that's one way to do it. So you could actually go and buy the 38s and sell these 38s and hope it doesn't break up to 50. But theoretically, you just go into Thinkorswim or whomever you use, and you do this. This is what I do if something is developing a good pattern in a bad market. The problem is with this, yeah, darn right, it's up 38 with the market getting hit. It could open at 39 easily. The easiest way to do it, move this a strike. Yeah, you'll make 5 cents. Very frustrating. But that's one way to do it, is to do something like that. You do the 39s as well. So just to let you know, those are some of the iterations. When something is developing a good chart, I definitely could look at it as a calendar. So just keep that in mind. The other thing, just to let you know, when it comes to buying puts or selling calls, I'll mess with something if it's cheap enough. So if if the stock's trading at 10.10 and it's a bull flag, maybe I'll buy the 10 calls at 15 cents. But I never buy out of the money options on calls unless I see a defined bull, ultra short-term bull flag. And same with the bear flags. Then, yeah, I might mess around, especially on a Monday or Tuesday, because they don't lose as much premium. And that's where I am. Thank you for listening. Like I said, I'm just showing you a couple of iterations of how I trade. Right now, when bonds are down this much, it's extremely difficult for me not to have some shorts sprinkled in also. I might trade the XBI because of takeover candidate stuff, but I have to look for shorts as well when there's this kind of divergence. So just keep that in mind and have